USDA loans offer a great solution for home buyers that are looking to purchase a home with little to no money down. In this short video today, we're going to talk briefly about all the basic requirements regarding qualifying and eligibility. Home buyers that have questions can reach out to us by visiting USDAmortgagesource.com or calling 1-800-743-7556. First, let's dive into just the basics and the benefits of the USDA loan, and then we'll talk a little bit about the eligibility and qualifying requirements. The program, of course, is 100% financing, zero down payment. This is great for first-time home buyers that may have the big obstacle of down payment that's preventing them from buying a home. USDA is one of the few programs left that does still offer 100% financing. And of course, it's a government-backed mortgage through the U.S. Department of Agriculture, USDA, and Rural Housing. The program provides a number of homeownership opportunities, again with no down payment, and the goal of the program is to expand the rural defined areas throughout the U.S. The program, it is a secure 30-year fix, government-backed program, and again, one of the few programs left that does not require down payment. The USDA 502 guaranteed loan, this is the program that is set for moderate income borrowers, and it's only offered through USDA approved lenders and banks. Qualifying income can be up to 115% of the area's median household income. We're going to talk a little bit more about the income and eligibility requirements in just a second. Okay, basically for qualifying for a USDA loan, it's not a whole lot different than regular conventional or FHA loans. Very similar as far as qualifying. The USDA program is only for primary residences, owner-occupied homes. Investment properties, second homes, or vacant land, this is not permitted under the USDA 502 guaranteed program. Again, just like most conventional loans and other government loan programs, the USDA will require full income and asset documentation. Buyers should be able to document stable income, whether it's through W-2s or tax returns for self-employed borrowers, and generally a 2-year history would be needed there. Again, just like all conventional and FHA loans. Credit scores of a 640 are generally needed for the streamlined approval with the USDA loans. However, slightly lower credit scores can sometimes be acceptable for buyers, especially buyers that may have some additional strong compensating factors like a good solid long job history or maybe extra savings. Those can be some compensating factors. Again, with USDA, the important thing is any qualified or eligible home buyer can get approved for the program. This program is not reserved exclusively for first-time home buyers. That's a common question we receive, and again, whether it's your first home or your 5th home that you're purchasing, again, if you meet the qualifying and eligibility requirements, that's really all that they're looking for. Okay, so what type of borrowers are eligible? It's important to remember with USDA loans, not only do they have the qualifying requirements that we just briefly looked at, that's very similar to other loan programs, but the difference with USDA is that there are 2 key factors regarding eligibility, okay, that these other loan programs do not have. That is really the household income and the location of the property or the house that you're purchasing. The household income, there are limits in place, and that depends on the county, the household, the size of the household, the location. Again, these factors come into place. The limit currently starts at a gross income for a household of 1 to 4 members, a gross income of $103,500. If there's 5 or more members in the household, that limit goes up to $136,600. Now, there are certain defined high-cost locations in the U.S., more expensive locations like many locations in California, in New York, maybe South Florida, that those income limits are even greater for those high-cost locations. So the good thing is that there's a handy income calculator that's on the USDA website. Visit our website, usdamortgagesource.com, and from there you can find all the links that you need to do the income calculation. It'll basically ask a few questions that you plug in, how many members are in the household, the location, the income, and then there's certain deductions that can be applied for borrowers. Maybe you're a borrower that's close to the income limit. There are certain deductions that are in place for households that have maybe members of the household that are elderly or that have disabilities or just dependents in general. Child care expenses, these are certain things that can be deducted. But that little calculator will walk you through it in it takes a minute and tell you if you're within the income limitations for the 502 guaranteed program. In addition to the income, the property must be located in a USDA eligible area that is defined eligible by rural housing. Again, there is on the USDA website a map where you can plug in a property address and it'll quickly tell you if it's an eligible area or not. Don't let the word rural fool you though. There are many suburban locations that are you would think would not be rural but are still eligible for the program. And it's also important to remember that USDA, it's not about who's selling the home. If it's a a regular sale by owner, maybe a bank distress sale, that's not really the concern with the USDA program. It's more the physical location of the property, where the house is located. Let's look at more detail here on the next slide. Again, USDA eligible properties, any single family residence that's in a USDA eligible area regardless of who's selling the home, private sale, foreclosure, those are all fine. It's just the home has to be in that eligible area, approved area according to the map, and the house has to be in good overall repair. No extensive projects or rehab properties. If the property again meets all the is in good repair, it meets all the same standards that's really in place for FHA loans and VA loans as far as soundness and safety. If those requirements are met, it's going to be fine really for USDA financing. So, good repair and then located in an eligible area. And again, don't assume your property is not located in an eligible area, as many outlying suburban areas may not seem rural in nature, could still be eligible for USDA financing. Again, only primary residences are permitted, and building on your own lot is not permitted, but that does not apply to a new home, a new spec home that's being sold to you by a builder. Okay, so you want to go purchase a new construction that the builder is purchasing maybe in a new community, and as long as that location is eligible according to the map, that's okay. Mobile homes, typically those can only be financed if they're brand new. In that case, the financing is typically arranged through the approved dealer that's selling you the home. Okay, so let's say that you're a home buyer that you do not meet the eligibility requirements. You want to live, maybe you want to live in the city, or maybe your household income is way too much. It's over the eligibility limit. Let's talk about some alternative home loan programs that are available. Probably the most popular option is the FHA loan. This is not 100% financing. It does require a small 3.5% down payment, but that can be received in the form of an eligible gift from a family member, perhaps. And The good thing with FHA is that there is no income restrictions or property location restrictions with FHA. You can purchase the home anywhere. You can make, it doesn't matter how much money you make. So that is probably the most popular option for buyers that may not meet the eligibility requirements for USDA rural housing. VA loan. Of course, VA is a great option, probably the best option if you're approved for that, if you are uh, present or past military. And not only is VA 100% financing, VA also, the big thing with VA is there is no monthly mortgage insurance with a VA loan, which is a great advantage. VA, just like FHA, there is no income restrictions or property location restrictions. And again, no mortgage insurance, low fixed interest rates, really just like FHA and USDA loans. They all have very attractive low interest rates that are fixed. Conventional loans, they're available generally as low as a 5% down payment. And again, like the others, there is no income or property location restrictions. With conventional loans, also you can have loan amounts uh, over $700,000, and in high-cost locations, those loan amounts can even be up to close to $1 million with the conventional loan. So that is a great option, especially for borrowers that need a loan amount that exceeds maybe the FHA limit, which is typically less. That covers really the basics of the program. Home buyers can always learn more by visiting the website at usdamortgagesource.com or call us 7 days a week at 1-800-743-7556. Thank you.